Innovative Eyewear Inc., trading under the ticker symbol LUCY on the Nasdaq, is currently sitting at 1.75 USD, which represents a massive intraday surge of 48.27% today. While most retail traders are fixated on the daily volatility of Tesla stock or the latest hardware cycles affecting Apple stock, a significant shift is occurring in the microcap space that most people are completely missing. You might look at a stock like this and see just another volatile penny play, but the reality behind this nearly 50% move is far more grounded in fundamental execution than the typical speculative pump. While larger names like Nvidia stock continue to capture the headlines for their data center dominance, Innovative Eyewear is quietly carving out a dominant position in a specific high-utility niche of the wearable market that is actually generating verified sales growth right now. The immediate insight here isn't just the price jump, it's the fact that this company just reported a record-breaking 65% annual sales growth for 2025, reaching roughly $2.7 million in preliminary revenue. Even more telling is the simultaneous announcement that the entire executive leadership team, including the CEO, CFO, and CTO, intend to purchase shares in the open market. In the world of small-cap investing, where retail participants often get burned by dilution, seeing the C-suite put their own capital on the line after a massive growth report is a signal that demands a closer look. The general expectation for a company with a market cap under $10 million is that it's a cash-burning venture with products that struggle to find a shelf. Most investors, using their individual brokerage or checking their Robinhood app, see these low-priced stocks as high-risk gambles with no staying power. They assume that if it isn't a massive tech conglomerate, it doesn't have a moat. However, the reality is that Innovative Eyewear has managed to capture approximately 44% of the market share for smart safety glasses on Amazon. That is a staggering statistic for a company of this size. While heavyweights are fighting over the consumer cool factor with mixed reality headsets, Innovative Eyewear is focusing on the Lucid Armor line, which provides hands-free communication and AI access for people in industrial, logistics, and security sectors. They aren't trying to replace your smartphone, they're upgrading a tool that workers are already required to wear. This distinction between a luxury gadget and a piece of required safety equipment is exactly where the expectation of a risky penny stock hits the reality of a growing business model with actual utility. If you're managing your own portfolio through self-investing or utilizing tools like Schwab Intelligent Portfolios, you know that finding an entry point in a stock moving 48% in a single day is about understanding the momentum versus the long-term value. Today's volume is significantly higher than the average, indicating that institutional curiosity might finally be waking up to this story. When you look at the Fidelity trading platform or use the Interactive Brokers platform to scan for high-volume breakouts, LUCY stands out because the move is supported by a fundamental catalyst rather than just social media chatter. The company reported that its fourth-quarter sales for 2025 were up about 45% compared to the same period in 2024. This isn't just a one-off spike, it's a consistent upward trajectory across 4 consecutive quarters. For those who invest online and look for companies that can scale without needing the massive overhead of a Silicon Valley tech giant, this lean operation is starting to prove its thesis. The momentum we're seeing today is also tied to the timing of the annual tech events in Las Vegas. As we sit here in early January 2026, the company is actively participating in major industry showcases demonstrating their new collections. They have built a brand portfolio that includes heavy hitters like Reebok, Nautica, and Eddie Bauer. By licensing these names, they bypass the massive cost of building brand recognition from scratch. This is a savvy move that often gets overlooked by people using basic investing sites that only show price charts and none of the strategic partnerships. If you're using SoFi Invest or checking your Fidelity Wealth Management account, you'll notice that the most successful small caps are often those that leverage existing retail infrastructure rather than trying to build it alone. Innovative Eyewear has done exactly that by creating a global fulfillment network that is now ready to support placements in national retail and optical chains. Comment below how many shares of LUCY you currently hold, or if you're waiting for a pullback before entering. To understand why the market is reacting so violently to the upside today, we have to look at the disconnect between the stock's 52-week high and where it has been trading recently. Even with a 48% jump, the stock is still significantly below its yearly peaks. This creates a tension where the recent operational successes, like the 65% revenue growth, are colliding with a share price that was previously beaten down by general market skepticism towards small-cap tech. When the reality of the sales numbers finally hits the public record, the stock has to move to reconcile that value. The insider buying intent is the cherry on top. It's one thing for a CEO to talk about growth in a press release. It's another for the CEO, CFO, COO, and CTO to all signal they are buying more shares with their own personal accounts. This level of alignment is something you rarely see in companies with a market cap this small, and it suggests that the people running the show believe the current valuation is still fundamentally too low. Looking at the business model, Innovative Eyewear operates as a developer and retailer of smart glasses that integrate Bluetooth and AI, specifically ChatGPT, directly into the frames. They've moved beyond the novelty phase by offering hundreds of frame and lens combinations, including prescription options. This is a critical point. Most smart glasses fail because they don't function as actual glasses first. By being an optical-first company that adds smart features, they're solving a problem for the millions of people who already wear prescription lenses. Their Lucid Armor line is particularly interesting because it meets strict safety certifications in the US and Canada. This allows them to sell directly into the industrial sector, where workers need protective eyewear but also benefit from hands-free walkie-talkie features and voice-activated AI for logistics tasks. This isn't a maybe market, it's a multi-billion-dollar safety equipment market where they have already secured a dominant 44% share on the world's largest retail platform. For those using Robinhood stock trading or Interactive Brokers stock trading, the technical setup here is just as interesting as the fundamentals. The stock recently hit a pivot bottom in late December and has been climbing steadily leading up to this morning's breakout. The fact that volume is following the price upward is a classic technical signal that this isn't just a fake-out move. Usually on the Fidelity mobile app or the Robinhood app, you'll see stocks spike and then immediately fade as early buyers take profits. While we might see some consolidation after a 48% run, the persistent strength through the midday session suggests that investors are actually hanging on to their shares. They are waiting to see if this sales growth translates into a tighter path towards profitability in the 2026 fiscal year. The macroeconomic pressures that have historically weighed down on small caps, like interest rate uncertainty and capital access, are still present, but Innovative Eyewear seems to be navigating them by focusing on organic sales growth. They aren't just relying on investment help or outside funding, they're selling products. When you compare this to the massive R&D spends of companies behind Apple stock or the capital expenditures of Nvidia stock, the risk profile is obviously different, but the potential for a re-rating of the valuation is much higher for a company starting at a $9 million market cap. If they can continue to grow at a 65% annual clip, they won't stay a microcap for long. Many people who use online investing platforms like SoFi or Fidelity IRAs tend to stick to the S&P 500, which is safe, but the real wealth generation in a brokerage account often comes from identifying these niche leaders before they become household names. As we look toward the rest of 2026, the catalysts for Innovative Eyewear are clear. They're looking to expand their retail footprint into national optical chains, which would take them from an e-commerce success story to a true retail powerhouse. They also have new product launches scheduled for the first quarter, including more variations of the Lucid Armor series. The risk, of course, is the typical small-cap struggle with cash flow and the need to scale fast enough to stay ahead of competitors. However, the current reality of their market dominance on Amazon provides a solid floor that most penny stocks simply don't have. They have a proven product, a proven sales channel, and a leadership team that is literally buying into the vision. In summary, what we're seeing today with innovative eyewear is a classic example of the market finally catching up to the operational reality of a business. The expectation was that this was a struggling, low-revenue eyewear company that might not survive the competitive landscape of smart wearables. The reality, however, is a company that is growing revenue by 65% year-over-year, dominating the safety glass niche on Amazon with a 44% market share and a leadership team so confident that they are buying shares alongside retail investors. While it's always important to use caution when trading stocks with this much volatility, the fundamental story here is far more robust than the price tag.